TJ Maxx parent stock gains as increased demand led to broad sales growth.
German consumer confidence to continue negative trend. Forex Live European FX News Wrap. Firmer dollar, stocks up awaiting Nvidia earnings. No shows, aid cuts mar, G20 meet on global poverty. Euro US dollar price forecast. Buying interest fades, sellers sidelined.
Euro US dollar drops as Trump's tax cut bill to boost US inflation.
Analysis American farmers to plant more corn, seeking best chance at profits. US dollar index holds near yearly lows pressured by lower yields.
Gold above $2,900, though faces pressure towards President Trump's speech. Thailand cuts key interest rate by 25 BPS.
Yo, yo, yo. I got the black and green on today, so I guess I need a black and green watch. We'll start in about 5 minutes. At 8:15 is when we're scheduled. Look at that one. Oh.
U.S. dollar index slow grind higher ahead of President Trump's speech.
Cool, right? Yeah, the watch is a replica of my wheels and brakes on my Porsche. I know, strange. Gotta get rid of that damn thing. But matches the shoes. Oh, no. Your watch has to match your shoes. All right, so I'll see you in 5 minutes, just listening to the news. Okay, about 1 minute. We'll get a news update and then I'll go.
U.S. dollar index slow grind higher ahead of President Trump's speech. TJ Maxx parent stock gains as increased demand led to broad sales growth.
German consumer confidence to continue negative trend. Forex Live European FX News Wrap. Firmer dollar, stocks up awaiting Nvidia earnings. No shows, aid cuts mar, G20 meet on global poverty. Euro US dollar price forecast. Buying interest fades, sellers sidelined.
Euro US dollar drops as Trump's tax cut bill to boost US inflation.
Analysis American farmers to plant more corn, seeking best chance at profits. US dollar index holds near yearly lows, pressured by lower yields.
Gold above $2,900, though faces pressure towards President Trump's speech.
Good. Let me just get our poll going. Oh, thank you. That was a nice little news update, huh? Almost done with the poll. All right. All right. Are you enjoying doing your taxes? Yeah, me too. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small. Stay humble, focus on the long term. Never risk money you cannot afford to lose. Bada bing, bada boom. Yeah, farmers to plant more corn. So therefore, don't plant corn. What does that mean? Too many farmers are going to plant corn because corn prices might be high. So this year they're going to plant corn, but everyone will plant corn. And, well, sorghum prices will go up, right? Corn prices will fall. So this is what Lucas is talking about. How about that? An egg comment. Yeah. Analysis American farmers to plant more corn, seeking best chance at profits. Isn't that neat? What was that, Wayne? Say it again. Analysis American farmers to plant more corn, seeking best chance at profits. Wow, I say it the same every time. German consumer confidence to continue negative trend. Anyways, welcome. How are you? Welcome to TRADARS.com and Forex.Today. Yeah, the real battle is between corn and soybean. Yeah, in particular for feed, right? As feedstock, yeah. Sure like the edamame, though. Well, how about that, Lucas? You go to a sushi joint and you're like, I'd like a bowl of edamame, which is soybeans with salt. Oh, that's $7 for a dozen. You're like, wait, that's not even a handful of soybeans. And you paid how much? Like, oh my God. Yeah, but anyways. Check it out. So we have our Squawk box. When you log in, this is our new dashboard. So when you log in, this is what you see. We have our news radar, which tells us the only things you need to worry about this week. And that's tomorrow at 8:30, we have durable goods. And then Friday morning, we have French CPI. Yeah, that's our entire week. If it comes out less than expected or greater than expected, we have the analysis. Durable goods are quite volatile, so it's really hard to get a handle on it. But you can see no scalp, no scalp, scalp. Mediocre if it comes out less than expected. What about greater than expected? No scalp. All right. No spot. Only a swing. Scalp, 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 scalp. So what did we learn? No matter what happens tomorrow at 8:30 a.m., whatever happens, you're not going to trade the Aussie dollar. Is that helpful? I think that's useful information. Durable goods. For the scalp tomorrow, we can draw the following conclusion about the expected move of euro dollar based on the last 12 durable good orders month-over-month events in the United States. If the actual is greater than 2%, 71.4% chance the 2-hour for euro dollar will be up. If the actual is less than consensus, 80% chance that the 2-hour trend will be down. Cool. Let's go with greater. And now we can go through the history of this. Okay? The history of this event. Cool. That's how you get to the conclusion. So 2 hours later, closed higher. 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 Okay. Yeah, Wayne, but do you have the other data? Boom. Yeah. 2 hours later, closed lower. Why? Check this out. If the actual is less than 2%, 80% chance the 2-hour trend will be down. And so, as you probably know, let's scroll down here. Let's just skip to February 27th, 2024. Do you remember that? Huh? Do you guys remember that? The 27th of February, 2024? No? Well, it came out less than expected. There was a significant difference. And euro dollar dropped and closed lower 2 hours later. Oh. Yeah, you don't need to remember if you have the data. Isn't that cool? And of course, that's just the 2 hour. You can do this on multiple time frames. Okay. There's basically a scalp and a day trade. That's it for euro dollar. Little more action on the pound dollar, little more action on the USD kitty cat. Okay, only a scalp on the Swissy, not much more than that. Okay, cool. So you have all the data. I just want you to have the data. Do you like scalping? %70 chance minimum. Okay, great. You like volatility? Oh, look, there's the implied low and high over the next 1 hour and 4 hours. Whoa, 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 whoa! What about that euro dollar? Cool. Remember, this has nothing to do with price action. This is the implied low for our session and the implied high of the day. If you're a bull. Okay? If you're a bull, this is what you're thinking. Cool. That's euro dollar. You should have been trading this a few hours ago. You can see volatility picks up, not declines. So volatility picks up in these hours. Volatility picks up in these hours. Okay? And the rest of the day, okay? Cool. So we have things are fine until about the London close. This is London open. This is London close. Okay. Yeah, Lucas wants to lock in those high prices, or at least profit. So Lucas can go through his books and see what the spending is and how much the loans cost and how much the insurance costs and how much the chemicals cost and the maintenance and everything that goes into the growing sorghum. Now, goes to the elevator, and the elevator says, well, currently, I can offer you the price of whatever it is. $5 a bushel. I don't know. But the thing is, he can go through and say, well, I believe I know how many bushels I usually get. Okay, great. And at $5, I'll make 2% profit. And I'm like, oh, cover all his costs plus 2%. Okay, well, maybe that's good, maybe that's not good. But so he goes to the elevator and he's thinking, well, maybe I can talk the elevator operator into giving me a 3% profit margin. That'd be great. So he's talking to the elevator operator, and the elevator operator offers him a price of $6, which is more like 10% profit. I'll take it. Done. Maybe he's happy with that, right? So I know someone that has looked at the hog business, and there's these I guess you'd call them ranchers, but they're very sophisticated operations. It's not like some guy has some land and he's got some cows and he's got some pigs and he's got some chickens, right? No, like very, very large. Imagine they're doing, I don't know, $300 million a year operating a hog business. I don't even know if that's big enough, but just imagine it's 300 million. So 300 million comes in, it helps you pay for all the expenses, right, of running this operation. And their profit margin is like 2%. Like they make almost nothing. Now, it's still a lot of money, but when you're like, wow, you spent $300 million to make a 2% profit? Yeah. So I don't know what the normal profit margin is, huh? Yeah, and Lucas is like, sometimes you're just the smallest profit. Yeah. Yeah. Or the smallest loss. Yeah. Yeah, you better love it. Yeah. Better love it. So anyways, cool beans and then sentiment. Neat tools, right? So what do we think about Nvidia? Well, I've spent some time doing research this week so that I could be ready for you. I figured because of today, Nvidia earnings are important. And you're like, Wayne, can you do some research for me? I'm like, okay. So I spent the last 7 days. I went to 28 different websites, and I read 173 articles. I went to sites including Barron's, Benzinga, Bloomberg, Business Insider, CNBC, Forbes, Fox Business. Okay? Kiplinger, Market Watch, Market Beat. Okay. I went to Seeking Alpha. I went to the Motley Fool, The Street. I went to Yahoo Finance. Isn't that nice? And I read 173 articles in the last 7 days, specifically about Nvidia. I did all of this for you. I spent hours and hours and hours reading 173 articles, understanding what the article said, and then I took notes of each of the 173 articles in the last 7 days, and then I did a comparative analysis of the general feeling about all of these articles regarding the future of Nvidia. And my conclusion is the market doesn't know. Okay, it's getting a lot of attention right now, and the market isn't sure. It's not positive, it's not negative. It's not good, it's not bad. Okay? What do you think about that? Oh, wait, I didn't spend hours and hours and hours and hours. I didn't spend 30 hours doing this work. I spent no time at all. Because I automated the process. Cool, right? So anyways, we got fundamentals, we got technicals, we got market sentiment, great analysis. The other thing you need is execution. Okay, so you want an ECN, get yourself Trader's Way or some other ECN if you feel comfortable with that. But I've been working with Trader's Way for over 10 years, probably pretty close to 11 years now. And they're great for execution. They're fast. They're faster than most. That's what you want. They don't trade against you. That's what you want. Cool. Would anybody like a prop firm that doesn't give you a test? A prop firm that doesn't give you a trial? Would anybody like a prop firm that lets you keep all the money, all the profit? Oh, cool. Well, I have a dream. Make you real. I'm your eyes when you can't feel. I'm your pain when you can't feel. Yeah. Anyways, I'm trying to get some stuff done on your behalf. Yeah, those are some good dreams though, huh? I think they are worthy of a good dream. I'm your dream, make you real. I'm your eyes when you can't. Yeah, anyways. How's the market today? Okay. Is this the full story? No, but I've done full fundamental analysis already today. The recording is already available to subscribers. We've already done all this, so I'm not going to do it again. Bitcoin getting crushed. Well, we had Bitcoin coming down weeks ago, and now it's down. Well, hell's bells. And I'm watching yield and oil in particular. And then you guys are probably watching gold, right? So I'll just jump around here. Jump around! Jump, 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 get down! Sorry, I grew up in the 90s. I peaked in the 90s. That's why I dress like Jerry Seinfeld and look like Ellen. Yeah, in the 90s, man. Gold. Okay. So statistically, when you analyze the price time data set, is this market bullish or bearish? Okay, bullish. How do we know? Well, what we're doing in our calculations of this, okay, is the rise over the run. That gives you slope. A squared plus B squared equals C squared. Just have to do the calculation of the hypotenuse. Yeah. Then you need to calculate variance. Variance, variance. Okay, this is important. Do you see the upward variance is more important than the downward variance? That means there's a skew. Okay? So you might say you are thinking this range for gold. Yeah, it's neat, right? So I have right? I have the ability to erase things. Isn't that cool? So is this how you are thinking about the market right now? Yeah? Now, when you look at this, it's telling you based on macroeconomics. Things like seasonality. Okay? And things like institutional positioning. Okay? It's including the statistical trend. Okay? It's also looking at things like inflation and the use of gold to increase hedging. So in the United States, inflation is going up. We went from 2 something to 3.0. Well, that could be bullish for gold. If inflation is coming back, you might want to own gold and not dollar. So there's a lot of different things that can go into all of this, right? But the fact that this is going up, there's only, it only matters. This is only one of maybe 8 or 9 or 10 different variables for the very bullish. Okay, so we are above the moving average. That's bullish. Okay. Now, if you are a bear, check this out. Let's do some technical analysis. Do you think it matters? Let me do this a little thicker. Okay, do you think it matters the size of this pullback and that this is the lowest low? Okay, what if gold now is up here? Is it possible this is our next move? And then the next thing is, if that occurred, we don't know, but if that occurred, that would definitely be the next move, right? Okay, so adding additional technical analysis, is it possible this is reversing? What's the importance of this drop and this pullback? Does anybody know the importance of, I think it's this price in here. What's the importance of that level? I'll give you a hint. It's not on this graph. This is a graph, not a chart. Okay, so what is it about that price level? You either know or you don't know. You're either Illuminati or your eyes wide shut. Psych, no, I'm not going to go with that. I think the actual number is 2947.6. So I'm very specific. Which R1? If it is an R1, which R1? Talk to me, Goose. That's right, annual. So either you know that or you don't know that. If you didn't know that, there was no way you could anticipate the potential for reversal. So if you thought this had a potential of reversal, then what I have outlined to you has a different significance. This might be a lower low to you. Therefore, you would expect a lower high, followed by a new lower low to support. Okay, so now you got to carry this forward. Okay, which would then project a new lower high. And anticipate a new lower low. Okay, and what do we call this? An old man easing into a hot bath. Now, is this a complete total collapse of the gold market? Not if inflation is going up. Okay? So you still have the fundamentals going on, but you should be able to see all of this. What does it look like? Looks like that. See, I've already drawn it. Too bad it doesn't overlap. Okay, this box area is that red line. Too bad. Let's do it again. See if I can remember the colors, right? Well, all right. There's the annual R1. Okay. There's the old support. This is the recent support, which then becomes resistance. So what I had shown before is once you've noticed this, your trade plan is up and then down. Okay? And then the next question is it this or is it this? Well, we don't know. Now, if inflation comes down next month and CPI falls, or NFP is low, it's a low number, then that's disinflationary and you don't need gold anymore. Maybe you're better off buying the 10-year T-note at, hey man, it was 4.5, then it was 4.4, now it's 4.3. Maybe money's coming out of gold and going into the 10-year T-note. Oh, snap. Yep. Oh, snap. Yep. All right. Cool. Oh. Right? I'm snoozing, I'm bruising, I'm never losing. I'm in my car going fast, and this is what I'm doing. Around the way is where I'm from, and I'm from Manhattan. I'm not a bum. Skirt chasing, free basing, killing every villain. Drinking and robbing and stealing. Yeah. So are you going to clear the market out? Are we on our way down to the 200 EMA? Oh, I don't know if I'm ready for that. I don't know. Money going to the stock market? Maybe. We have potential tax cuts coming up, potential government reduction in government spending coming up. We're probably at a paused Fed for the entire year. I covered all this in the annual outlook, though. We have another one coming up. I guess I should schedule that, huh? We have a quarterly update. So I guess I'll probably have to schedule that. But we've covered all that. And so if the Fed is paused, great. Yeah, well, I will schedule it so you know what day it is. Maybe the Wednesday after non-farm payrolls. How does that smell? Maybe we should just schedule that now. The Wednesday after NFP. What do you stink? Smell like a plan? Shh. Do you smell something? That's my favorite line from Ghostbusters. I'll be there. Just call my name and I'll be there. All right. So what do you stink? Something like that, maybe? So to further your analysis, you'd want to look at seasonality, wouldn't you? Oh my God, where would I get that? Well, you can go to a different website and pay, I don't know, $40 a month. Or you can just pull it up here. It's included. Yeah. Okay. So February is a down month. And then there's a 2-month rally. And then you should take profit by the end of April, early May. What do you think? Let's let it load. You can see the cloud is still loading. There we go. So week 12, usually, look at this. Week 4, it peaks. And then down, down, down. A bounce, and then down, 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 down. So week 12, somewhere around week 12 is where we bottom out here, huh? That's in March, isn't it? So is that 2 weeks from now? So you could say somewhere in the next 10 to 30 days, we would find somewhat of a bottom in gold. Then gold's going to rally up for a month or so. And then you'll be 2 standard deviations above the average. So maybe by somewhere around week 15, you take profit. Cool. Why? Because prices will collapse. And then it'll do nothing, 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 nothing. Buy it. Oh my God. Okay. Yeah. So prices often settle around here. You know, you can see by the time you get to, there's that week 15 where you get out of the market. And it goes flat, 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 flat. And we don't make a higher high until week 32. So maybe down here around week 30, you get back in. I guess you could do it week 22. Okay. This period here, there's an up, followed by a down. Are you guys loving this? Illuminati or trading blind? Oh my God. What? Oh, we're in week 9. We're here. So week 7, week 6. Sorry, week 7, week 8, week 9, week 10. What do you see? Okay. Okay. So here's the direction. And then this is 2 standard deviations below the mean. So it's oversold. So you have this, and then you have this, and then you have this, and then you have this. Cool. What do you think? Is that useful information? Well, we don't know if it's the future. Okay? We don't know if it's the future, but it is the past. So somewhere in January, we peak, and over the last 5 years, February has been a bad month, and this is what actually happened. Okay? Red to red, and then somewhere here, and then somewhere here, and then somewhere here, and then somewhere here, then somewhere here, then somewhere here, then somewhere here, somewhere here, somewhere here. Oh. Yeah, cool. How nice is that? Yeah. Yeah, Kevin's like, yeah, generally the 20-year and the 5-year are kind of the same. Yep. Something unusual has happened here since COVID. Okay. But the drop is faster and the recovery is faster. Maybe it's more mature market. Maybe trading is faster and easier. So they say the word for that is friction. There's less friction. So it's easier to dump it, easier to buy it back, easier to dump it, easier to buy it back. Maybe it used to take longer. So it took longer to sell, took longer to reaccumulate. Maybe. Okay. Now imagine you only made a couple of trades per year. It would seem that this would be useful information, wouldn't it? Or do you want to buy peaks? What do you want to do? Buy peaks or buy valleys? So this is monthly data. When you look at this stuff, it's weekly data. Can I reload it? I do this all the time, don't I? This one you can't reload. Still, I can't get it to let go of the zoom. Sort by, export, no. This shows the best weeks versus the worst weeks. 13 is great for selling. 12 is great for buying. Okay, well, maybe that's useful information too, huh? All right. There we go. No, it's still wrong. Anyways, I could probably just do it this way, right? Yeah, I'd like to make those improvements. Still won't let go. Interesting. Let's do some technicals. Let's move on. Let's double check our settings. All patterns, all stocks. Just doesn't seem to be picking up anything. Here's Nvidia. 16 hours ago, there was a short on it. But not much, just a little scalpy thing. So you can see what it's thinking. Maybe you can see what it's thinking, but I suppose. Okay, you start to look at it this way, right? Yep. Yeah, if I was scalping or day trading this, yeah, that would make sense. That there's this potential and then this potential. Although that wouldn't have happened yet, so I guess we wouldn't have been here yet. Okay. That's Nvidia, so it's going to move today, right? 38 billion in revenue for the quarter. Wow. It's like $1 billion a day for every work day. Wowzer. So anyway, 16 hours ago, that's what was what? Is it my favorite type of trade? No. But notice that's on a 4-hour. Okay. So if you're going to trade this, you would just pull up that chart. Nothing else going on for Nvidia, just that little skippity scalp. And it's not thinking about the news coming out this afternoon. It just is looking at the technicals and well, in particular patterns, and recognizes the market's uncertainty about what Nvidia is going to do. So there's going to be a lot of people betting on Nvidia today, right? Scalpers and even dumb institutions. Remember, institutions are not necessarily smart money. So there's a lot of people that are going to gamble on this event. Okay, but using the top 20 most reliable patterns, we can analyze quantitatively that the market is quite uncertain about the direction of Nvidia over the next 24 hours. You can see it right here. There's only one pattern, and it's not even a good one. We also analyzed Nvidia based on market sentiment. And what that showed us was, after analyzing 173 articles in the last 7 days on 28 websites, the market is uncertain about the future of Nvidia share prices. So why are people degenerate gamblers? Oh, 50-50 odds, huh? That's called gambling. Huh. Buy the rumor, sell the news. It comes out greater than expected and collapses. Possible? Plausible. What do you guys think? It's neat stuff, isn't it? Oh, you don't use artificial intelligence? Oh, well, too bad for you. Yeah, too bad for you. How does the market feel about gold? Almost neutral. Wait, Isn't that what we just did, technically? Uh-huh. We're long-term bullish, but short-term uncertain. Oh. We were much more confident in gold at the end of January than we are at the end of February. We were at a 55. We're now at 20. Dude. Okay. Dude, we were at 55. Now we're at 20. What do you think? Good to know? Okay. How long does it take you to read 41 articles about silver? I'm done. Okay. Silver just dropped significantly overnight, though. Cool. So in less than 1 second, I read 18 articles on FX Street. You're welcome. I know it's not beautiful. I know it's a little clunky. But it's pretty good, nonetheless. Okay. Aussie dollar lost some of its love. Whoa, we were loving the Aussie dollar 2 weeks ago. It's over, bro. We went from positive 23 to negative 23. What? What happened? Australia cut interest rates. Inflation's 2.5. Unemployment is 4.0. Whoa, you don't know that from the top of your head? Oh, that's too bad for you. We covered all of that yesterday in our on our week on the street. Yeah. How do I know these things? Oops. How do I know these things? I read the economic reports on a regular basis. Okay. It's not too low. Inflation is too high, however. My microphone sucks. How come it's not awesome? Anyway, so look, we actually read these reports. Air Force. I think we would just overpower them. Did I cover this in the oil course? It's neat, isn't it? At a pretty decent price. You know what we're looking at? The prices of lactose have fallen 3.4% in the last 2 weeks. But butter's better. Chet it down. Chet it down. Wait, you don't track the price of mozzarella? Really? What do you do all day? What do you do? What are you doing? And more Kiwi dollar to bring in their gasoline and diesel. So check this out. In the Bank of New Zealand, the Reserve Bank of New Zealand, they talk about lower exchange rates will be good for their exports, but bad for their imports. And they're importing petrol at higher prices on top of having a weak Kiwi dollar. Oh, what? See? You either know or you don't know. You're either Illuminati, yeah, or you're in the dark. They just say canola. Okay? Neat, right? Whoa! Whoa! Consumer price inflation in the UK. What? You either know or you don't know. You know? Dude, we have such a good time. There is no. What a cool thing. Let's go back to technicals. All right, so we did some stocks. S&P 500. Okay. Is this a good time to trade the S&P 500? What's the best time of day to trade the S&P 500? What kind of vol radar? What kind of vol radar is it? Lows highlights implied volatility. So we are going to look at the S&P 500 going back a very long time, many weeks, several months. And you should be hot to go HOTTOGO somewhere around 5 or 6 a.m. New York time. Okay, yeah. If you're a bear, you're thinking this today, huh? Why would you possibly be a bear? Well, there's a high, there's a high, there's a high. Have we made a higher high? Not recently. Now, when you look at these ranges, it's interesting because you get rid of this and notice the implied highs for bears were important. So we're making a series of lower lows and not higher highs. So if you are a bear, you have permission to engage if you so choose. Okay? 3 hours ago. Oh, you mean here? Yes, that's what I mean. So if you're a bear and you were trading 3 hours ago, you'd probably want to get short. Where? Right around the 1 hour and 4 hour implied high. What's your target? The daily low is just the implied low. But you might be in it for a few days, so you would suggest a lower low because it's a trend, and by definition that means lower low. And then you'd probably drag this across, and then the next trade plan for you would probably look like that. But you know this is the right time of day to be trading. And once London closes, there's a giant fizzle. Okay, what is this? The Asian session. Okay. Cool. That's your day trade. What's the day trade? Right here. Okay. Tell me about day trading. You're a bear. Do you expect it to go higher than this price here? Just tell me the thoughts about being a bear. If you're a bull, disregard everything. It doesn't matter. But if you're a bear and you're right here. Now, these numbers would have been different back then because they change every 15 minutes. But if you're a bear, there's no way in hell it's going to make a higher high. Oh, this is the time that we are now. It's Wednesday between 9 and 10 a.m. It's just now. See, this updates every 15 minutes. These numbers update every 15 minutes. Even the daily high updates every 15 minutes. But I want you to think about being a trader. If you are a bear, there's no way we're going to get to that level. No way. It's impossible because that would be a higher high. So how do you use this tool? Well, you know as a bear, it's not going to make a higher high. Okay? I'm trying to get that straight. I'm not trying to cheat. Sorry. Okay? It's not going to make a higher high. How do I know? I'm a bear. That's how I know. If I thought it was going to make a higher high, then I'm not a bear. If you're wishy-washy and you don't know where you stand, you don't know what team you're on, that's why you're suffering horrible, horrible pain. Okay? So, what is the job then? Your plan is this. That's the first move, probably even lower. Great. So, the use of this tool is also showing you that your stop can be just above this. Because based on the math, okay, that's what the implied volatility. It's quantitatively or statistically possible but unlikely based on past performance, which is not a prediction of the future, but you're just trying to quantify where should your stop be if you short. Well, you want to short somewhere around here because it can't go higher than that. Now, I would have wanted to short here. Maybe you wanted to short here. Somewhere in between, we know that's a short zone. Okay, so if you shorted anywhere near X, then your stop could either be here or here, depending on your confidence level and your risk preference. So your day trade, for example, could just be have it come to this pink zone between these two pink lines where the X is, and somewhere, ideally around the market open, we continue mission this way. That's your whole day trading, and your stop would be up there. So you're like, okay, that's the S&P 500. So you're like, okay, that could be interesting. So now you go, I have two iterations here. I guess we have it over here. What does the S&P 500 say? The top of the channel is right where we were. Target is down there. Oh, we just did that. Yeah. Another way of looking at it is, let's go take a look at it. Ooh, oil just hit my number. Oh, look at the oil. Nice. I think I have S&P over here. Here we go. Okay, cool. So let's clean this up. Okay. Yeah. Down, 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 down. Let's drop into a smaller time frame. Okay, so what you're working on here is you don't believe we can get higher than that price. Did you know that this is an annual pivot point? Oh, do you think that's important? Yeah, could be a rabbit, could be. Oh, interesting. So with the implied vol, you also have an idea. Okay, you have an idea that your stop is going to be up here and down, you might think is most likely. Okay, let's add to this. Let's add another layer to the onion. So you, based on what's happening, you're a bear. And let's make this, okay, here we go. And your trade plan is this. You knew this yesterday, so don't, right? You knew this yesterday, that your trade plan was this. So would that have impacted your thought process, knowing that this is the best candle to trade? How do I know that? Having analyzed weeks and weeks and weeks and weeks and weeks and weeks and weeks of S&P 500 volatility, this is the best candle of the day to trade. Oh, wait, and that's on an annual pivot point, which is also a role reversal. So now you just have to be a bear. Now, will you know you're right? Let me tell you something. Even if you trade every day for the next 25 years, you never, ever, ever know you're right. I want you to grab hold of that universal truth. You never know. So the only thing you could possibly do, okay, is know what you intend. So if your intention is to sell S&P 500 as long as it doesn't make a higher high, then you know the time of day and you know the price and you know the target. And this is your trade plan. Are you going to make money today on that? I don't know. Is that correct? I don't know. Is this going to fall today? I don't know. Is Nvidia going to rally this up today or drop it? I don't know. But if you don't know, if you don't have intent, you don't know what you want to do, that's your underlying problem. So if we look from, so that's today. This is yesterday, which is a Tuesday. So on Monday, check this out. What's the trade plan? Have it come up to the sell zone. It's labeled bearish selling zone. There's no buy zone on here. Notice there's no buy zone. There's only a sell zone. Okay, so you're here. And the trade plan is very, 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 very clear. Okay, you're a bear, so you're thinking down. I'll do this in red. This is your bearish selling zone. And you know this here. You know it before. See, we're still trying to calculate tomorrow's sell zone because we haven't even gotten going yet today. And that'll impact our trade plan on Thursday. We're still calculating Thursday's plan. Wednesday's plan was done yesterday. You're always going to be 12 to 24 hours in advance minimum. You will always be 12 to 24 hours in advance at a very minimum. I know what I intend to do the third week of September. I know what I intend to do the third week of March. I know what I intend to do at the peak of summer. I don't know if or when or what, but I know what, I know the what, I should say. All right, so going back to Monday, what was the plan for Tuesday? Sell there. What is the plan for taking profit if that works? Right here. And we knew all this information on the X. Okay. So here's what it is. Up, sell. But Wayne, it's still Monday. Yep. So you sell at the roll reversal, you sell at the moving average, you sell in the bearish pivots. Which one's correct? They're all correct. It's all the same dang thing. Cool. So what's the target? Right here. We knew this on Monday, by the way. Monday. We knew the target for Tuesday. And then on Tuesday, we know this is the sell zone. And we know this is the target. And if we get down here, guess what? This will develop and we'll have a new trade plan that'll look like that. And that pink zone will spread out and all that kind of stuff. But because we haven't done anything yet today, it hasn't developed. It's waiting for the S&P 500 to make its move. It can't do it until S&P 500 made its move. So if it's a big down day, then guess what? Thursday is probably going to be a big down day. And I already have it drawn. Has it happened yet? No. But my point is, you have more than enough information to have made the decision yesterday. And you have more than enough information to know that this is the best candle of the day for you. So now you're right or you're wrong. But you're not confused. That's pretty hardcore, huh? Dude, this is good, isn't it? This is some good stuff. Yeah. It's good stuff. I hope you trade this way. I hope you trade this way. I really do. I've been teaching this for 20 years. Dakar's an owner of Wheel. That's really cool. Well, I'm proud to have you as a client, Dakar. If you guys are not familiar, I'm involved with Peerless ETFs. We have a publicly traded ETF called the Wheel. Why? We use the Wheel options trading strategy. It's been around a very long time. We're the only ETF with the Wheel strategy, and we have a patent pending on it. The point of the ETF is to lower volatility, so less volatility than the S&P 500. And we want to pay income. dividends. So think of it as like at the end of every quarter, we like to kind of like take all our profits and give them back to you, Dakar. So the share price won't change very much because we keep taking our profit and giving it to you, Dakar. Yeah. So right now, based on what we've already done, our annual dividend is nearly 14.5%. Oh, okay. Okay. And here's all our documents. You can download and read any of those. And then, of course, all of this stuff is great because it shows you things like all our open positions. Cool, right? Pages and pages of open positions. Well, that's cool. Yeah, now you know what you're getting yourself into. Get yourself some K-Web. Okay? So anyways. Right on. So anyways, that's what's going on over there. So thank you. Thank you, Dakar. Thank you for your trust. What did you cover yesterday? Word for word? Oh, this sell? Right on, man. Cool. Look at this. Markets are open. Bada bing, bada boom. Okay. So now maybe you're in scalping mode. Wait, there's no traps. How come I don't have traps on here? Template. The other one says traps. Oh, there it is. Okay. Cool. Yeah, well, if you're trying to lower your vol, that would do it. So you can almost think of wheel as the how you say, like the fixed income part of your portfolio. Like you want something that kind of mimics bonds. The price doesn't change very much, but pays you income. So think of it like this. Let's say the price of wheel drops 14%. Because the S&P 500 drops 30% or whatever, depending on what our beta is, right? Let's say, what did I say? How much did I say? 14%, right? So actually it would be more like, let's say the S&P 500 drops 22% and wheel drops 14%. Because we have a lower beta. Okay, great. How much money did you lose? What's your total return on the S&P 500? Well, you're pretty much negative 22, maybe even 20, if you collected some dividends along the way. Okay, great. So wheel is not down 22, but only 14. What's your total return? Well, you're collecting 14% annually. So your total return is 0 versus negative 22 or negative 20 or negative 18, whatever the S&P is, minus the dividends you collected. So, so it's a long-term investment. And it should, right? If you believe the stock market could be down 22%, but 2 or 3 years later it's back to the top, if that's your belief system, then wheel is probably appropriate for you. I don't know. Talk to your financial advisor. Okay, so you see our little trap and break. Okay. So what am I highlighting? I'm highlighting, delete, right here. What is that? Well, according to our implied volatility research for the S&P 500 going back weeks and 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 weeks, that's the best trading candle. The best trading hour. That's your hour of power. Remember I showed you on the implied volatility tool? The best hour of the day, right? That's it right there. So the next thing is, if you're a bull, does that look like a good price to buy? No. Why? It's at resistance. So you take this further out. Oops, if it'll let me grab it. No. Grab it. No. I'll just draw a new one. Okay. That seems to be resistance, right? So where are the bulls going to buy? Here? Yeah. Okay. So which one are you? Bear sell high, bulls buy low. Done. And everybody else is an innocent bystander. But it's not me. That's just how you trade. You buy low at the open, or you sell high at the open. What else? What do you right? You have a different strategy. You're not a bull or a bear. You're something else. You're like all right. Well, wouldn't have occurred to me that there is another way. Okay. So the implied low for bulls is here. The implied high for bears is here. So tell me, how do you trade this? A bear is going to sell and a bull is going to buy. Which one's right? We don't know. If you're somewhere in the middle, you're probably going to get run over. No man's land, right? Are you going to be shot by British and Australian guns, or are you going to be shot by Turkish or German guns? Suppose it doesn't matter. I wouldn't be in the middle of that mess. Yeah. I have an Australian relative that died in Gallipoli, if you understand the reference I'm making. A lot of Australian boys died on those beaches and hills. Under young, was he an admiral? Or no, he was a government guy, commander of the admirals. Churchill. He was so disgraced. Churchill was so disgraced by his early government career that he basically was forced out of government and had a negative reputation and no job. What did Churchill do to get his comeback? Why is Churchill so well respected? Who is the prime minister before him? Was it Cumberland? So Churchill, what happened is he started to see the rise of power in Europe by the Nazi Party. So he started going on this new technology in the early part of the 1900s called radio. Wireless, I think they called it. Been around for, a couple of decades, but it was still, by that point, everyone had a radio in their house. Before TV, radio. And so he started going on BBC and talking, the Nazis are coming, the Nazis are coming, the Nazis are coming. To the point where he seemed like a conspiracy theorist, so he was kicked off BBC. So he had to go to the United States. So he went to the United States. The Nazis are coming, the Nazis are coming, the Nazis are coming. And then guess what happened? Cumberland didn't do anything. He thought it was a crazy radical idea. But the Nazis, we're not going to go to war with Germany, right? So anyways, he did nothing, prepared nobody. Military wasn't ready. Government wasn't ready. Everyone was caught off guard. So when the Nazis ended up being a problem, wait, I'm mixing all my years up. It's not Nazis. Sorry. Well, anyways, but whatever. I think I screwed up my own story. I think I'm confusing two different things. Oh, long day, dude. Maybe we'll just cut it off that. Like, there were no Nazis in 1917. What are you talking about, Wayne? All right, so we're going to... Still, it was the Germans. Yeah. Oh! Foot in my mouth. Sorry, it sounded like a good story there for a little bit. It was going somewhere. All I was trying to say, let's get back to the point. Who trades in here? Broke-ass traders, right? Wonder who the heck I'm thinking about. The Nazis are coming, the Nazis are coming. No, maybe I did have it right. When was Churchill? No, maybe I did have it right. It was between World War I and World War II. So he was admiral not admiral, but whatever, commander of the naval forces in World War I. So yes, no, I had it right. I had it right. So then the Nazis are coming, the Nazis are coming, the Nazis. Yeah. But he was so disgraced in World War I. Yeah, I got it. That's right. Brain fart. He was so disgraced in World War I that he basically was banished from public, not just government. And then he was, the Nazis are coming, the Nazis are coming for years and years and years and years. And so when they actually showed up and the UK was caught off guard, they needed someone to lead the charge. Well, we have Churchill. Yeah, so there you go. Long day already. Well, you know what? I think I'm glad I saved that. I saved it. Good save. Good save. I think we'll get on with trading. Okay. You guys are split on the risk on or risk off. Well, so are our gauges. So I would like to provide you with the link. Go to youtube.com/@TRADARS and use our free squawk service. What you do is you open this page and then you just minimize it and you'll hear the news. That's it. That's all you do. Just minimize it, boop, and you'll hear the news running in the background. Sell zone, buy zone, everything's right as rain. So I think I'll zippity-doo-dah over to the page, over to the squawk room. Am I going to see you over there at the YouTube live stream on the squawk box? Am I going to see you over at the chat? Okay, come over and say hi. Boop, 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 boop. Come on, guys. Come on over and say hi. While you're there, give it a thumbs up. I already thumbs upped it a couple of days ago. Thank you, Denise. Thank you, Kevin. Anybody else coming over? My plan is to make another jumbo coffee and then zip over there. Hang out there for a while we watch the market. So come on over and say hi. Let me know you're here. There's James. Coming over? Hey, Beta. Yeah, we got 500. That's a start. Yay! Anybody else coming over? Hey, Jim. Good morning. Good to see you over there. Who else is coming over? Peter. G'day, Peter. Peter. TT's in the house. Oh, is it? Refresh it. And there's more and more. M&M's coming over. Right on. All right, guys. Well, I guess I will fire up the old coffee machine. And I'll get my laptop up. It's a beautiful day. The sun is out, so I think I'm going to work outside in my Mojo Dojo. So I'll see you guys. I'll log in about 10 minutes, maybe top of the hour. I'll be over on this page, youtube.com, on the trader site. So peace on earth. May the pips be with you. May your profits be above average. Cheers.